So, of course, some of the big things we got to worry about this week is CPI. Let me find the most important one. The 9th to the 13th. It's the right week. Yeah. Um, so, Fed Chair Powell speaks on the 10th. Uh, Not a whole lot. We have consumer credit, things like that. On the 9th, the 3-year note auction. So, it looks like from the 10th on is when the real big stuff is going to start happening. Let me check the other calendar right here. Yeah. See, we have consumer inflation expectations, stuff like that, on the 9th. But yeah, really a lot of this. So Fed Powell speaks at 9 a.m. on Tuesday. We also have the 3-year note auction. I've been noticing like the 3, the 5, the 7, the 10. Those note auctions really seem to move the market, at least for a short while. Like it may not move it for like put it in a certain direction and move that way all week long, but it does have the power to move it at least in the short term.
Mhm.
Um, on the 10th, we no, sorry, on the 11th, we also have a lot of mortgage stuff in. That'd be a good day to watch for banks. I'm going to chart out Wells Fargo and Citibank. Also, that day we have a lot dealing with oil. So we have crude oil stock change, distillate, heating oil, gasoline production. Now, out of these, the one that strikes me the most, and I have to see exactly what day it's coming out on, the 12th, is the natural gas stock. And we can look at that right here in a minute, too. I think it's primed for a good move. We'll take a look at it and see exactly the way it's setting up. Now, we have like also on the 10th, we have Cushing oil and the 10-year note auction. Again, that's another one that'll really affect the financial markets. But the big daddy of this week is going to be CPI. Comes in at 8:30 on the 11th. What else is there at 8:30? Initial jobless claims. So those two are really going to kind of impact each other. You know, of course, when inflation's high, they want to see uh, less jobs. You know, more. Matter of fact, I think it was Amazon the other day announced that they was going to lay off 17,000 people or 18,000 people, and the stock boost up. Mainly because that's one of the indicators that shows recession is starting to pull back or could be starting to pull back in the future. CPI, I don't know how it's going to react as far as their estimates go. I do think that it's going to be either right at or to the good of it. Um, as far as like, I think it's going to be better than the last CPI. I'll put it like that. Now, how it matches up to the estimate is what will determine whether or not it's priced in and how the market will move. But another interesting thing coming in on the 11th that kind of has me excited to see which way it does is the WASDE. Now, this is an agriculture report. It's a world agriculture report. Um, so, with food being one of the highest uh, things in the CPI report, the inflation report, whatever, I'm curious to see if things are starting to get better or if we got more pain coming in the future with it. This, because we really need food, utilities, rent, things like that to start pulling back. The CPI minus those things, it is doing pretty decent right now. It is with those things that still keeps it in the red. Like we're really talking about recession territory, or at least probably uh, a lot of pain going toward that recession area if we do not see those things starting to back off. We also have the 30-year bond auction. I'm not really big on this one, so I'm not sure how it does. Like I said, mostly it's the 3, 5, 7, and 10 that I usually watch. Those usually move the market, so I'm curious to see how that works too. So the 11th, sorry, the 12th is going to be the day that we really need to see um, how the market is going to choose to move from there forward. Like, are we going to continue up? If we look at the SPY during this time, we're kind of still trading within this range. We did come out a little bit of it, but then we got on the 4 hour chart. Then we got another red candle that kind of brought us just right under the 200 or right at it. So we've not officially broken out yet. So I'm curious to see, do we kind of have hit this 390 area and pulling back from there, or what's going to happen? Because we are very put heavy in the market still. Um, and in order for this to pull back much more, at least out of this range, we would expect to start seeing it to be a lot more call heavy in the market, things like that. Max Pain starting out the week is 384. Now, depending on how people buy in the morning, this could change a little bit. So with SPY currently sitting at 388, we would expect it to pull back a little bit more before it goes forward. So with what I'm seeing, what I'm expecting out of the SPY is one of two things. And I know it's going to sound like, duh, yeah, of course it's going to go up or down. But there's some key areas here that we can look at to see, give us a little bit more direction. But either we pretty much bounce where we're at here and continue on upward toward this trend line. If I put it on the day chart, we can see this trend line a little bit better. And continue back up to this trend line, which will actually give us a new higher low, which could mean that we start to break out and get out of this trend. Or we'll pull back at least back down to the bottom of this consolidation trend that we're in and possibly break out from there to the bottom side. Now, the key areas that we want to watch on that is if we're going to bounce to continue higher, we need to do it between now and 385. Pretty much 385.02 or 384.90 within that range, and that will give this top layer right here. I got it in blue. That will turn that into support and give us a signal to other buyers that right now is a good time to get in, that we're going to go higher. Now, if we see a break of that area, especially of the 50 EMA, and we get down below that, we can actually get rid of these yellow. That's I do for daily. Now, if we break below that and start getting into this buying and selling range right here, the supply and demand range right here, then we really need to get under the point of control within this range if we are going to be bears and continue lower. So from the 50, we would expect to continue down to about the point of control, about let's say 382 to 380, and then we need a break of that to continue on lower. Especially, we'll be fully out of that range if we break below 378. If we take a look, let's take a look at futures real quick. It looks like as of right now, it's wanting to head higher. We actually gapped up as we started up, but we are within this resistance range. So if you're looking at the E-mini futures, we need to get over 39.29 in order for us to say, yeah, we're clearly breaking out. We're not going to reject. We're going to head higher. So that's kind of the range we're looking at there. As far as the economic calendar goes, we don't have PPI until next week, so we don't get the supply side of it until then. We're only getting the demand side of it. The 13th, which is Friday, we have Fed Harker speaking. So after CPI, after all that comes out, expect, I say by then we'll probably have a few more Feds that is probably going to speak or have a speech coming up or something like that. One of the good ones that I watch, guys, if you don't have a pay-for news service like Benzinga or something, is on Twitter. Breaking market news, one that has this red, almost bullseye type thing. He puts out a lot of good free news, and it is on point. Let me tell you, it is right as the news is coming out. Great to keep up with. If somebody's talking or numbers are about to come out, they come out right as they're supposed to. I mean, it's almost as good as having uh, like Benzinger or something like that. In some cases, they put it out even quicker. So the 13th, the Michigan consumer sentiment will be a big one. Uh, the Baker use oil rig and total rig count. Those are two that's going to be big for oil. So this week, as the play that I put out on the Trading Collective newsletter was with ExxonMobil, mainly because of oil. And I'm bearish overall, just on as far as like a scalp goes. But uh, I do put a bull and bear case in there because this news could come out pretty decent, pretty good, and we can continue up. But what I'm thinking of until we do start getting some news is we're rejecting back off of this 4 hour upper trend line here that we're in, um, and could possibly pull back uh, to the, what did I say on that? It was like the 407, 406 area, I think, maybe 408, 407. But pretty much the 407 area, give or take, 407.50, somewhere right around through there. Pretty much right, we see this big, thick red line and this green line right in here. That's where I'm expecting to see a pullback to. Uh, we're currently sitting at 110.30, so that'll give you about a three times your delta on that if it falls through. If not, if we're going to stay bullish, I'd look for it to bounce at pretty much around 109.75, continue back to this upper trend line, breakout. If we break out, we're heading back to that 114, 115 level. Uh, so those are some key areas to watch on that. Tesla is another one we've been watching. I do look for it to go a little bit higher, especially if CPI comes in good. I need to clean these charts up some. Let me just take off the ones. Tesla has been holding just right above this 100 level right here at about, say, 106 to about 103. It's been holding that level as support. I could see us possibly heading back up to about the 120, 122 level, uh, possibly entering either a consolidation period or a dead cat bounce and it continue on down. So as far as the economic calendar goes, I believe that's it for this week. Going from here forward, we've got the some areas I'm looking at is CLF. We'll go over these. Or sorry, XLF. XLF. That's the financial. We have uh, what is consumer staples? I think it's XLP. Yeah, consumer staples because of the WASD stuff coming out that could affect things. And then tech and energy. And I'm also curious. Let's take a real quick look here. Financials. So with mortgage and everything like that coming out, financials is going to be a big one. Uh, I know Wells. I'm pretty sure Wells Fargo is the biggest weighted in financials, so I usually look at that. And another one I like to look at is Citigroup. And usually because if you're going to swing, these are cheaper. They move pretty decent in a few days. You know, you get a few delta cycles every couple of days. Uh, if you want to go higher, you could look at something like Visa or MasterCard. Those are usually above the $100 range. You get a lot more delta cycles out of those. Um, JP Morgan's another one. I'm pretty sure it's up there, ain't it? Yeah, 137. So these are some if you're looking to get a little bit more delta cycles out of. Try to go above stocks that have that $100 range. Uh, they work out pretty good. And it's been overall affecting the overall sector. They should all, especially the heavily weighted ones, should all play out pretty similar. Now, of course, they're each their own stocks, and news can drop on either one of them differently. But out of the most heavily weighted in those, they should play out pretty similar. So tech has been pretty beat down here recently. Let's take a look. Let's go out to the weekly here first. We can see that just like the SPY, it's in this, well, of course, like the SPY or the QQQ, because its tech is pretty heavily weighted in the SPY and Qs. But we've kind of headed down this trend line down. What we're looking at is to see if it's finally found support along this green line right here. Is a good just look at something. It's a good spot. We can see that's bounced there for a second time. It did go a little bit lower, but overall we're still bouncing within that spot. Now the question here is, will it have that momentum to break our 200, get back over it? I don't know. I doubt I would play it like that. We do see that there is some buying and selling going along that area. Uh, but as long as we can pretty much see this green trend right here, we mark it. If we can find support above that, should easily be able to get back up within this range. Even though we do have this red candle here, I think it's very doable. But really, in order for tech to take off again, the market really needs to go risk on. They need to buyers need to be able to know that it's okay to take a risk right now. It's okay to jump back into things like semiconductors and Apple and things like that. But let's check out UNG here. So yeah, we're starting to fall.
It's way down.
Yeah.
Like over a year, I got chart on it. It's lower than that.
Yeah, this right here goes back to December. But we're starting to get within this range right here. This 1196 to what is that, about 1032. Within that, that's where this is going to be kind of like the make and break it for natural gas. And the problem with natural gas right now, I know a lot of people are saying, well, it's winter. Shouldn't they be using a lot more gas? But really, that's more the build up to winter is whenever you see it, because people, it's kind of like buy the rumor, sell the news. So people know that winter's coming. They're buying up natural gas, going into it, and selling off coming out of it, right? So we'll really have to see, we can see that we really need to see if it'll catch itself before 10, let's say 1030, 1050. If it doesn't, we're probably going to continue a little bit lower. We're still having a lot of problems with natural gas. The U.S. has a lot of natural gas, but we also import some too. So there's still problems with a lot of that.
And they stockpiled it up in Europe for the winter, and I thought it was nonsense. Like, oh, it's going to be a warm winter, but man, it really is warm.
Yeah, yeah. Like we've had a few little cold spells, but no, it's for the most part it's been shirtless weather. You know what I mean? Could this bounce and go higher? Yes, and I hope it does for a lot of other reasons. But we need to be prepared and saying, yeah, we're willing to go lower with it. But natural gas is one that I will be watching at these levels to see what it does. The market is pretty much being propped up by energy right now, and the worst case scenario is energy drops off before technology has a chance to pick up. But the best case scenario is we see this sector rotation. We actually see it rotating from energy into tech. It probably ain't going to be as clear as watching energy drop out and technology skyrocket. But as long as there's a balance in that rotation, we should be okay and hopefully not head too much lower if something does go awry. But the way things are looking, guys, and this is best case scenario, is that CPI comes in pretty decent. We continue heading up. We have, by the end of this month, we're already going to have some big names like Tesla, Netflix, and there's a couple others reporting earnings. Uh, and then going into February, we should start seeing our super earnings week where we have Google, Apple, Amazon, uh, all that starting to report within just a week, or sometimes even the same week as each other. Uh, when we're looking at that number, and I'll post that side here in a little bit, but our earnings beat really needs to be above 70. It went really low this time, and we felt that pain from it. But with expectation, kind of getting you know, brought back down to earth and guidance starting to come in lower and lower. I do think there's going to be a couple of these still missing just because, you know, things are pretty bad in some of these tech spaces. But overall, the hope is that we will have more beats than misses to the point where we continue on up and maybe the bottom is in. It may not go into a complete uh, full rally, but at least maybe we can start consolidating higher and higher as we go. Yeah, that's kind of the hope. So if you're in energy right now, you might want to start looking. I'm not saying, sell everything you got, but you might want to start looking at some other sectors to go into, technology being a pretty decent one to kind of go into when the bottom is in, when we start seeing support and things like that. It is going to be a little bit scary for this month, possibly going into February, because there is some unknowns coming up. Like we really don't know how earnings are going to go. We also got to keep in mind that the Fed, almost every one of the Fed members that has spoke has said that, yeah, we're still going, like originally we had thought maybe we'll see a pause around the beginning of the year. And they're saying, no, we're still going to have to uh, be very, very hawkish on this. And we're going to have to probably continue the interest rate up to about 5.5, if not higher. Uh, and then we might see that pause, bringing it back down. Hey guys, if y'all got any questions, DM me or throw them up in live stream or public. But also one other thing, I've been doing uh, putting some more plays back on the sub channel on here, the zero alerts. I've been putting plays there. We're going to start back our daily watch list, uh, things like that. So anytime y'all got any questions about a play I've mentioned here or one that you might have, feel free to message me. I mean, don't feel like you're bothering me one bit. That's what I'm here for. I love this stuff. So hopefully, uh, we'll start getting into this more and having some more available for you guys from now on. Unless I post otherwise, we should be having this every Sunday. And we'll see if we can't get something going on Wednesdays again, too, with those classes. Hopefully, with the new year, we should have some more stuff for you guys. Hopefully, you'll take advantage of everything that we offer. Like I said, I don't mind one bit. If you guys have a question, if you message me, if it's something you don't want out there, you're more than welcome to DM me. Sometimes it takes me a little bit to get back on DMs, but I will get back to you. But with that being said, I'm glad y'all showed up today. I hope some of these plays work out, and we will be trading these during the day from open to close. Especially, we really hit the CPI stuff like that. We trade those um, very intently. We kind of are counting down the clock until they come, that kind of stuff. So we've done pretty decent here lately, and hopefully you guys can join us and jump in on some of that too. So with that being said, guys, y'all have a great night. We'll see you in the morning. Watch your futures, watch your pre-market to see how things go in the morning.